It's going to be a double dose of Markets with Megan today. It is Wednesday, June the 12th, and we have two big market moving events today. I'm going to start this morning, and then we'll be back later this afternoon with another podcast. But this morning, we got the monthly consumer price index report. So this is the inflation report. Why is it important today? Because this afternoon, the Federal Reserve meets and it's going to set interest rate policy and also give us updated dot plots on where they see interest rate policy going the remainder of this year and in 2025. But let's break down, first of all, the CPI report, because the markets are definitely moving on this today. The report came in a little bit better than expected. So it was the lowest level on a month-over-month basis that our headline consumer prices were basically flat. It was the lowest level since July of 2022. If you look at the core level, so this is going to exclude food and energy, that was up 0.2. The expectation was for it to be up 0.3, and that was the lowest in 7 months. On a year-over-year basis, we're still running above the Fed's target. The headline is up 3.3%, and the core is up 3.4%. So let's dig into the details within that report. Big drop in gasoline prices for the month. That was the biggest month we've seen in gasoline price decline in 5 months. So that had a lot to do with the headline being flat. And when you exclude that out, the core was slightly higher. And that was driven by the fact that we're still having sticky shelter prices. That's housing inflation. That remains relatively elevated, rising 5.4% over the past year. Where we saw some other declines, though, apparel, vehicles, and then airline fares. So again, you're seeing some deflation or disinflation in some areas that are very discretionary. So that is things like apparel. It's things like travel. This is good sign for the Fed. It shows us the consumer is strained and that they are reducing this spending, and that's why these prices are dropping. What does it mean for the markets? And we'll see what the Fed says today. So the equity markets are up on this. They were up very big when this was first announced. We've seen bond yields actually plunge on this report as well. The 2-year yield is down 17 basis points just today thus far alone, and the 10-year is down 13 basis points. The futures market has pulled the chance for Fed rate cut to be in September. It's now 75% chance that they'll cut rates in September. It'll be very interesting to see what the Fed has to say this afternoon. So we'll come back with another podcast. This is good news. Inflation is moving in the right direction. The bigger question is it moving fast enough for the Fed that they can cut rates? We're not so sure about that yet. And what will they say about these sticky prices that we're seeing, specifically in, like I mentioned, housing? This is one of those areas the Fed has been concerned about. So we'll be back this afternoon with some more information from what the Fed has to say about this and where we see interest rates going from here. Thanks again. If you have any questions or comments, please feel free to reach out to podcast@burdens.com.